All right, welcome back to another episode of the Black Bullion Show, and those three letters are VIX. Do you know why the VIX had been rising in the past 2 weeks? I mean, we know it basically gave us in the gold and silver community a nightmare recently, and we couldn't tell what was up or down, but whenever the VIX rose, we knew it spelled trouble for us. So why did it rise to begin with? And how can we be on the lookout for this so we can brace ourselves in the future? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So, when the VIX is high, it's time to buy. When the VIX is low, look out below. This is a common phrase that's used when one wants to figure out how to trade against the VIX. That's volatility. And it makes sense. You've likely heard people say that they make the most money in stocks during periods of high volatility. And just, take a look. The VIX was high at the start of the Ronies here. And if, anyone got gold and silver during that, well, gold and silver plummeted during that time and soon after started, climbing from their depths. So if you bought low around that time when the VIX was high, you were probably pretty happy thereafter. And, same thing in June, there was a decline in gold and silver prices, like very, very slightly when the VIX was up. The higher VIX reading actually didn't peak as high as this one in June here. I'm talking about the VIX that we had recently. Didn't peak as high as this one, but the prices definitely came down a bit more significantly this time. So why does this happen? Well, here's why. There we go. I was wondering where we were here. Measuring market movers. Investors have been attempting to measure and follow large market players and institutions in the equity markets for more than 100 years. Following the flow of funds from these giant pipelines can be an essential element for investing success. Traditionally, smaller investors look to see where institutions are accumulating or distributing shares and try to use their smaller scale to jump in front of the wake. Monitoring the VIX isn't so much about institutions buying and selling shares, but whether institutions are attempting to hedge their portfolios. It is important to remember that these large market movers are like ocean liners. They need plenty of time and water to change direction. If institutions think the market is turning bearish, they can't quickly unload the stock. Instead, they buy put option contracts and or sell call option contracts to offset some of the expected losses. So, what does buying a put option contract mean? Well, think of it like this. It's like buying insurance. If the value of, let's say, X goes down to a certain price within a given time period, this gives you the right to sell it at that price. Now, you usually would do this if you suspect pain coming in the markets. Now, this is a very simple way to explain options contracts or put options specifically, but I know most people here aren't into that kind of trading. They're more into the long-term and physical metals. So let's just go into how to prepare for this, because I think this is something that everybody can do without having to be a market or a trading wizard. So we're going to go and look at the VIX here, and I'm sure it's going to undo everything I just did because it's Market Watch and they always give me issues like that. But what we're going to do here is we're going to take a look at the VIX, and then we are going to give it a specified date range, and we're going to put two indicators on it. Now, this could be a very quick way to just monitor and see where the VIX is heading, so you can prepare yourself, whether you are into silver stacking or gold stacking, Yes, even the physical stuff, so you can prepare. So let's go to the year to date, and let's scroll down here. Now I'm going to get rid of the MACD, I'm going to get rid of volume, and I'm going to actually add the RSI. So far we have the simple moving average, which is this black line, and then we have the RSI, which is this green line. The VIX is the blue line. Now, I'm basically looking to see when this whole thing will essentially slow down right now. As in, when will this VIX end? When will it slow down? So as you can see, recently the VIX has been above the SMA for some time now. It's got a nice little space here above the SMA. So the RSI is also complementing it, with it being definitely in overbought territory. Now we're in the low 50s right now. It's come down. We're in the low 50s in the RSI, and we're beginning to mean revert a little bit in the VIX, converging into the SMA here. And that's something I'm actually happy to see. It actually lets me know that hopefully this whole thing is, the volatility is running low. But though this is the case, we're not completely out of the woods yet. We're essentially like a couple of feet away from being out of the woods. Who knows, maybe a grizzly bear can just pop out of nowhere and come attack us. But if you use the VIX as a tool to see if trading has become overheated, this may be useful when you're timing your purchases or you're selling. So everyone, hit that like button, hit the subscribe button. Thanks again for watching. It's Black Bullion.